Financial Argument. Follow us on YouTube.
Hello, this is Tom Clay with this week's Precious Metals Market Update. I'm going to kind of review, this is Tuesday the 26th of April, and I'll be leaving town rest of this week and all of next week, so I will not be doing an update a week from today on Tuesday. It'll be 2 weeks before the next update, so I want to summarize a few things. Number one, we know what's going on in China. The gold and silver exchanges are open. They're seeing tremendous response to it. Some places are estimating as high as 17% increase in demand just because the public, a country that's 4.5 times bigger than the U.S., can now buy and take delivery of physical gold and silver. So this is going to be a real crunch on demand as we go. So, and supply will certainly be a problem. The number two issue is what's going on with Obama and Saudi Arabia. We continue to see this going back and forth where Saudi Arabia basically has said, if you allow families to sue because of 9/11 Saudi Arabia, because you say we had a financial interest in rolling the towers down, and Obama is saying, no, you're not going to do it. So Saudi Arabia is saying, well, if you don't, then it'll be the end of the petrodollar. So if that happens, there's not one question that the dollar would plummet and plummet very quickly, because not only would Saudi Arabia not take the dollar as a petrol currency anymore, you would have China liquidating over $1.3 trillion of U.S. treasuries, bonds and notes, maybe not all at once, but it would put a downward spiral on the value of the U.S. dollar. I hardly know anyone out there in the financial world that's predicting the U.S. dollar is not going to go down a lot more than the 5% it's already gone down in 2016. And as we've talked about in review, is every time the dollar goes down 1%, historically gold goes up 10%. Currently, it's only been going up about 4 to 4.5% for each 1% because it hasn't caught fire where people are trying to liquidate dollars. Next point in review is to remember the U.S. Treasury market is very thin. Because the interest rates have been stagnant for so long, there's hardly any bids. Who wants to buy a bond and get paid 0.5% or 1% even? And look at Europe, where they're seeing negative bonds, and all this is leading, and we've seen the bail-ins in Austria 2 weeks ago, where out of nowhere, people had money taken out of their account. We've now seen this happen in Greece. We've seen it happen in Argentina in the past. We've seen it happen in Cyprus and very close in Italy. And why people think it won't ever come here, I can't figure out. But you need to be sure you don't have more money in the bank than you plan on paying your bills. Because when there is a bail-in, and it will happen as soon as there's a financial crisis, your money will be taken, or at least a portion of it. At the same time, the U.S. Federal Reserve will have to buy up the debt in a rollover situation because they're having trouble even selling the debt now, because bonds have been going up for 30 to 35 years, and there's just nowhere else they can go. So bonds, when they roll over, is going to be the biggest. The stock market going down is nothing compared to a fixed income market when it rolls over, because there's so much more money in the bond market than there is in the stock market. And then on the supply, as I talked to my own wholesalers in the western part of the world, is we're already seeing delays in some of these COMEX products, 100-ounce COMEX silver bars, and even on the 1-ounce gold bars that are made by the Perth Mint and the Royal Canadian Mint, we're seeing delays delivering those. So, I mean, this thing is really tightening up, and you need to be getting, because you're going to see premiums, meaning defined as what I have to pay a Royal Canadian Mint product for, or a U.S. product, and then I've got to mark it up and sell it to you. So anyway, all this is coming, and as I've said, we've already seen gold up 20 1%, silver 23%. I think you'll see both of those up more than that rest of the year. So it's not too late. In fact, it's a great timing to get in. You've already seen the gold clear certain stops, which makes the stop move higher. So that's a good thing for us as we await the next move in both gold and silver. If you need to talk to us, you can reach us at 800-247-2812, 800-247-2812. If you're interested in a precious metals IRA, you need to give us a call and we can tell you how to get a custodian. We can act as your broker and representative, but we can't do the custodial work. You've got to have one of the approved custodians by the U.S. government to do that. So give us a call and you can talk to Dan or Kathleen or myself, and we can walk you through how to have that self-directed IRA. And if there's any of you still holding rare coins, you need to call us. We think it's going to be a big move in the bullion coins, but not so much in the rare coins because the collectors continue to drop out. And where we've seen the rare coin index go up about 80% in 15 years, we've seen gold go up 5 times. And I think that's the way it's going to be going forward. So hopefully we can answer questions, and don't hesitate to ask us the tough questions. We're really here to help you. I do this out of a labor of love. Yes, we make money, but I'm working because I feel that's what God has me doing, not because I have to work. I do it because I enjoy it. I've done it for 40 years, and I'm excited about every day coming to work and talking and helping people get their portfolios diversified. So I'll see you in a couple weeks with this week's Precious Metals Market Update. This is Tom Cloud signing out.